Hello people, right, update on this cable, couple of extra trades, roughly 19 pips each net of spread, and both short trades. And as I've said many times on here now, well, firstly we must have the disclaimer: never trade what I say, always do your own analysis. This is for teaching purposes only and teaching my method, whether you like it or not. If you're here, I guess you might like it. So the I've added a few lines to the analysis. I connected here to here. The minute that is broken, that's a valid descending trend line in my opinion. And then I drew another descending trend line. Sorry, I meant descending, I think I might have said ascending. Descending trend line from here becomes valid once this gets broken, this low here. So you know, because how do you know if a level is true resistance? In my opinion, it's when it makes a lower low in a downtrend and a higher high in an uptrend. Seems quite straightforward. You get all these people that arbitrarily connect, they say we've got to connect 2 levels or 3 levels or something like that, or 3 touches or 4 touches, whatever. You choose to do it how you like it, but that's my way. And then once, I'm not sure whether I'm repeating myself now, but once that's broken, that's a valid trend line there. You can see the price popped up through it a couple of times. It's just popped up here as well, but all the other lines on here are were drawn as a result of the previous video. I had to remake this video because I had a coughing fit, so there might be a couple of other low lines, but I'll go through my analysis as we bring the charts, the trades onto the chart. So first trade, or second trade of the day, first on this cable, was a short based on the break, the break of this reversal here. So low, high, higher, low, higher, high, pull back, then high, low, lower, high, lower, low, lower, high, lower, low, and close. Once that close had happened, I was away from the screen for this one, making a cup of tea or something. Target, these gaps were the original gaps drawn on the previous cable analysis video. So I cut my target short on that one, and then the second trade was almost immediately after that trade, literally a minute. And the reason for that then was because I'd had to suffer a little bit of drawdown with this one. That's my fault for getting in late, and just trusting my analysis, because what you can see on here, you know, when you get these crosses over of the 8 hourly EMA, the 96 on the 5 minute, of course, in the busier periods, if you like, that is a pretty strong signal. So then you just drop down to your candlestick and histogram analysis, RSI, and you know, it's high, low, lower, high, lower, low, pull back. So there was a good trade there potentially, but I was making a video at the time, and that was the Billy 15-minute cable break bar, if you remember correctly. We're on the 5 minute chart. So that's it. Trend analysis, support and resistance. So why did I enter the second trade? Well, this is the move of the day. We're below the 8 MA, the hourly 8, and they tend to move with vigor, if you like. And the next target was down here. Now this will make you laugh, because I broke my own rule of going short, taking profits a couple of pips short of the target, because I didn't notice it reversed straight up again. A little bit of drawdown, nothing to panic about. And then you know, we had the reversal confirmed here as well. This one was entered just on the strength of the price action, which you will, if you study, you will be knocking out trades like I do. It's taken me ages, but you've got the shortcut process to this method, if you like, because I've done the legwork. All you've got to do is watch price action and hopefully gain confidence of the method. It's an age-old method, support and resistance, and trend analysis, a little bit of ancient chart drawing methods here, and the rest, as you know, if you go and watch my previous videos, is all about the highs and lows of green and red candles. And this beautiful instrument here, the histogram. So I can't stress enough how powerful I think that is. Something I was going to mention, actually, 5-minute chart. And I've mentioned many times that I need to really start to do some stats on this histo. But what I like is if you get a break, I'm noticing this quite a lot, like that pullback there. Now it's pulled back, it's gone green. But once you get a break that breaks the low of that, in other words, more momentum, that seems to be similar to my momentum indicator, but more often. So I'm talking about this one here. So don't go in on the first red, because that's lower than that, higher than that one. But once the previous red's low is broken, and ideally below the 20 level here as well, that seems to be a brilliant way of getting in. The later ones, obviously, you will struggle, because, and I'm talking about the one that broke this one here, because you're going to be right at the end of the trend. But something like, or alternatively, when you get the second one after the trend has formed, the second biggest red bar is likely to give you some pips. It's a work in progress at the moment, but I'm noticing, you know, there's little things with this histogram that we're going to improve on. And remember, your indicators, whatever you use, must be non-repainting. That's deadly important. And just for information, the other thing I wanted to mention, yes, also this is important on this video, is you need to remember your flip zones as well. And that's why, you know, I wasn't overly bothered about taking this much further, because you've got a serious error. The high of that red candle, you can draw this flip zone in manually, really, rather than use the flip or a line. You could actually put levels on there, like the resistance on that red candle there, the resistance on that yellow candle there. You won't see it go on, but then the support on both of these candles there, and the next candle there, and look at it's flipped as well there. So you know, this is experience with candlestick analysis, guys. But you know, what came first, the flip zone or the support? And we know it's the left hand side of the chart, and it's been used many times. So all these guys that arbitrarily just draw a support line, you can do it with precision, or more precision in my opinion, if you practice my method. And we can also see where the extreme of that candle acted as absolute micro pip, and that's, you know, that's a massive candle. So you know, I hope this helps you guys. I really do, because it's so powerful once you get your head round it all. And it's quite simple, really. I know the lines make it look like spaghetti junction, but it is a straightforward method. And this has repelled the price. You know, if you'd seen a close below this, and then a little pullback, and then a trigger to go into the trade, you could quite happily, potentially, trade that gap there. And I don't think that's to be particularly sneezed at. That is, or sniffed at. Yeah, there's easy 15 pips there without having to take it right to the low of that. So, you know, just thoughts, food for thoughts, guys, and thank you for watching. Don't forget, subscribe and like it, because I gather likes get you further up the ratings. So, and comment, of course, ask questions. Thank you. I'm off to walk the dog now and have a coffee.